Today is Monday, June 25th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADMIS's Senior Financial Economist, and Mike Niemiec, ADM Investor Services Grain Analyst. Alan, let's start with the financial markets today. The U.S. dollar hit a new 11-month high last Thursday, but closed lower, forming a one-day key reversal on the daily chart.
Right.
What are the implications of this for the price direction of the greenback?
Well, for one thing, the one-day reversal is a formidable chart pattern. It did come on high volume, and it does suggest that the dollar may be topping in here. And one reason, fundamentally, that this could be the case is that the Bank of England last week had a more hawkish tone, in other words, looking for possibly raising rates in August. So if the Bank of England can raise rates, it puts upward pressure on interest rates elsewhere in Europe. So the interest rate differential advantage that the dollar has enjoyed for so long may be dissipating to some degree. So that would suggest a sideways to lower price trend for the dollar index going forward.
Alan, can you comment on the current outlook for the trade situation between the U.S. and China?
Well, it is clearly getting worse. Apparently there are going to be some new restrictions put on China this week and also on the European Union. We have to be clear that there are no winners in a trade war. So I think it's likely to get worse before it gets better. But financial markets, and that would include the interest rate markets, are showing less and less reaction or less and less flight to quality buying, suggesting that there may be some resolution down the road. Not this week, but there is something better coming, I believe.
The world stock indexes are quite interesting. Why did the NASDAQ and Russell 2000 futures advance to new record highs last week, while the Shanghai stock index fell to nearly a two-year low?
So once again, clearly there are no winners with the trade war, and as you can see today, the indices globally are lower. In fact, here in the U.S., there are sharp declines. But this could be an indication that once the trade situation is resolved, whenever that is, that the U.S. equities may outperform equities elsewhere in the world, especially Chinese equities.
Mike, let's talk about the grain markets. There's been a little bit of volatility in June thus far. Why don't you tell our viewers how the grains have started out trading this week and what has been the leading factors driving the markets?
We have been a volatile month this week, or this month of June. The overnight trade, and starting off this morning, continues on that defensive trend. The themes continue to be the same. As Ellen mentioned, it has something to do with the trade wars that are going on with China not being resolved. Number two, if we didn't have the trade wars, during this time period of June, July, we generally kind of watch crop conditions and weather, and they have been non-threatening. So that kind of directs the money flow. The money flow has gone, we'll talk about that maybe in a little second, but the money flow has gotten drained. And then the other thing has been just the fact that with this June USDA report, they're showing that we're not running out of grain right now and or oilseeds. So all that has culminated into us pushing us into this last week of June into a, how do you want to say, a downdraft. If you're a art aficionado, if you're a bear, the charts look beautiful. The bear, or the bull, the opposite.
Mike, I know you're talking about the flow of money and potentially the commitment of Treasury report. I know you like to follow that report. What does that report look like currently, and how does it tie into the topics that drive the grain markets currently?
Well, this week's going to be an interesting week. We're going to have today, we're going to have the export inspections coming on out, and our next crop condition reports coming on out, as far as us still staying 70% good excellent in spring wheat, corn, and beans. The trade had been, that being the managed money on the commitment traders report, a sizable net long to begin the month of June, mainly in the corn, beans, and in the meal. There's still a sizable net long in the meal, but what happened is on the commitment traders report, they've now gotten short. So as we work our way through the week, the end of the week is going to be very important. First notice day, we're going to have the USDA reports coming out, being the quarterly stocks, being planted acreage. After the report, it's going to be the commitment of traders report. And I guess they're short, but they were not as short, that being in the corn and beans as we were surmising. They got a little bit long the soft red winter wheat. So I guess it's an open-ended question right now as far as where that money flow wants to go, depending on where the weather is going forward, of which is going to be of some importance too.
So Mike, here we are last week of June. Can you comment on the current weather across the U.S. and what might be the most important topics for grain traders right now?
Depends on what weather person you want to go and look at, and you're coming up to the July 4th weekend, and we are on the defensive here in the morning, and we got as cheap as $3.60 corn and $8.60 beans, and we have not taken that out in $5 wheat as far as last week's spike. Having said that, we are going to go and look and see what these reports have to go and say on Friday. Then we're going to go and turn the calendar. Then we're going to go and look at what's the July forward weather forecast going to be. Now you've got some forecasters talking about a ridge coming on in, and that's a favorite word for a lot of traders to go and say that, hey, wait a second, we can have a price and a pattern change and a weather change going forward. But my point is that I guess I wish we were deeper in the month of July, got the trade wars out of our system a little bit, and I don't know how soon that can happen, get the trade a little bit net shorter, because as we go forward in the U.S. supply and demand tables, at least in the June report, they were talking about carryouts, both in the world and the U.S., coming on down. Will that be the case? But obviously, we're still in this June-July time period where what dictates price is what's going on with crop conditions, money flow, and the weather forecast. So we've still got a lot of open-ended questions. So 860, 360 may not hold on up. It can be taken on out, and/or those can be the lows of last week, the spike downs. And after the turn of the calendar, going into July, if the weather does want to change, then all of a sudden, those are the lows.
So right now, favorable weather across the U.S. and really the key focus being the trade situation.
Correct.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.